Well, thank you so much for having us. My name is Emma Davidson. This here is Miles Stouty. I am the CEO of a company called Stouty Capital. Miles is the CIO, and our business runs the Global Value Fund listed on the ASX. Allow me to just spend a few moments talking about the Global Value Fund and what we've done over the last 11 years. From there, Miles and I are going to talk a little bit about the big picture, just give you our thoughts on what we're seeing. And then we want to talk about these two tectonic changes that we've really started to get some traction over the last 10 years and that are starting to accelerate. And we want to bring that to your attention as well. Just starting with the GVF update, I think I'll just spend 2 minutes talking about what we do. You know, if you're new to us, the first thing that the Global Value Fund looks for when making an investment is a discount. Trading at a discount is when the share price of a company trades below the assets of that company. In Australia, there are about 100 or so of these companies that have ability to trade at a discount. Globally, there are thousands. The market cap of that industry is about 600 billion US. Now, we specifically go into these structures and we're looking for that discount and a catalyst to unlock that discount. So it's not just hope, we want to have a catalyst. And the second thing we look for is we want to diversify the underlying assets that we end up holding. So that discount plus diversification are the two most paramount important aspects of the strategy. And in the time that we've been going, 11 years, we haven't had a single down year running the strategy that we've been running. There are only 8 other products in the Lonsec universe that can claim the same. We've annualized at 11% per annum over that time period. And I would argue that we've outperformed across the board. Now, that's a very big statement, and I will qualify it. I think the best way to think about it is maybe to compare us to equity markets. It's important to remember that over the 11 years that GVF has been running, we've only actually been 30 to 35% exposed to global equities. But I'm going to compare us to equities nonetheless because it's been such an incredible area of growth. Over the last 11 years, Australian shares have annualized at 10%. The US has annualized at 17% per annum, and global shares have annualized at 13%. Now, equally important to the returns that you made is the risk that you took to get those returns. The highest volatility there came from Australia. US shares was 12%, global shares was 11%. And volatility is generally the most common risk metric we use to decide how risky something is. If you then divide the returns by the volatility, you get what is called a Sharpe ratio. But very simplistically, a Sharpe ratio simply shows you the quality of the returns that you've received. The higher the number, the higher the quality of returns. And you can see there, Australia, has a Sharpe ratio of 0.58. A Sharpe ratio over 1 is very unique and quite rare. You can see the US has run with a Sharpe ratio of 122, so it has the highest quality of returns over the last 11 years. Global Value Fund, we have run at 11% per annum, but crucially, we've run with that much lower volatility, which has actually given us the best Sharpe ratio of the lot, so the highest quality of returns. I wanted to look at a few more things. Credit is something that people are talking a lot about in Australia, so I looked at that market as well. I looked at the top names that always come up, CSL, CBA, BHP, looked at how they've done. Property, what is a conference without talking about property? So I've got some A-REITs in there. I've also got some CoreLogic data. Noosa Heads happens to be the best performing area over the last 11 years. So I've put that up there as well. And then just 2 funds that we get talked about a lot. So Plato and Teleria. And if you take all that data and you kind of sort it in order of the quality of returns, hopefully you can agree with me that the Global Value Fund has kind of outperformed across the board.